Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hours show. We've got a bunch to talk about, and I think some reflection on the market and a couple calls that I made. One thing really cool is I sent out the very first trade setup to Patreon members today. And if you'd like to get our exclusive trade setups and help support our research analysis and technical breakdowns, then click the first link in the description to become a Patreon member today. We've got a lot of cool perks coming up by the end of this quarter. Trade setups is just one of them, and we started sending those out today and got some good feedback about them and a couple things to update and change to help provide a little more clarity on them as well. But the market is just it's starting to act a little bit weird right now. I'll get into the monologue here in just a moment about the market. Before I do, I just want to say the most important thing about this live stream is what's on your mind. So if you do have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. We'll look at the technical analysis on the chart and see what we can figure out. We'll look at the financials for the company and try to piece together some puzzle pieces for you to help you out the best that we can. I've also been thinking about, Devin, you sent me a question talking about, how can you get your bearings back if you maybe made a few bad trades, and how can you get out of that slump? And I've been giving that a lot of thought, and quite frankly, I almost find myself in that position this week. I've made a couple of calls that didn't go the way that I thought that they would. Even though earnings were really good for a couple companies. Take Target last week, for example. The market moved in the opposite direction that I thought it would. So I'm still pondering that question. The best thing that I can come up with is to always look forward. You know how the market changes every day, right? Every single stock, every single crypto, they're never flat. They are always moving. And as investors or traders, we almost need to do the exact same thing. And it's hard for us because we have emotions and we feel those emotions. When we have a great trade, we feel awesome. When we have a trade that doesn't go so well, we don't feel good at all. So all I can say really is just what I'm feeling right now, and that is to just keep moving forward. When you make a mistake, try your best to learn from that mistake so you don't make it a second time. But one of the biggest lessons that we can learn as investors is not from our calls that we get right. We get those right, we feel great, we keep moving, right? But when we get a call wrong, we kind of stutter and sputter and spin in circles and, oh, why did that happen? Why did I make that call? Oh, stupid me. That's the emotion taking over. And try to just look past that emotion, learn from what you did, learn from the mistake. How can you do better next time? And then move forward. That's all you can do. Otherwise, this is a game that is really then too hard to play. If you just let your emotions stack up inside because of bad calls, this is a tough game, and it might not be the right game for you to play. It's unfortunate to say that because the market can really provide a lot of growth for people financially, and we're all, every single one of us, we are striving for financial freedom, for financial independence, and the market, quite frankly, can give you financial freedom if you know how best to do investing and trading. And hopefully, at least it's my goal, is somehow by sharing what I know by sharing mistakes that I make and what I've learned from them, hopefully you can catch on to that and it can help you to prevent you from making a mistake that I may have made and make you a better investor on your investor journey. We are all on investor journeys. Each and every one of us, we're on our own paths, but we can learn from each other. And I hope you can learn something from me by me just putting this out there, my investment thesis and my thoughts on different stocks. I hope it does really help because that's my end goal. And it's the whole reason why I am doing this. So without going on about that, let's just jump right into it. So the S&P 500 and the Dow Jones, they wavered a little bit along the session to close higher as gains in financial and cyclical stocks outweighed the losses in the technology sector. The underperformance of the small cap Russell 2000 indicated the rotation was prominently in large cap stocks. The S&P 500, the energy sector, was up 3%. Financials were up 1.6%. And real estate was up 1.1%. Those were the sectors that did well. They were rising between 1 and 3%, while information technology was down 0.2%. And it doesn't sound that bad when you think of technology stocks being the whole sector only down 0.2%, even though there were a lot of technology stocks that got hit pretty good. Consumer discretionaries was down 0.6%, and communication services were down 0.4%. Those were the sectors that closed lower. Meanwhile, the NASDAQ tumbled 0.5% as higher yields dragged down tech stocks, as it seems to do every time there's a spike. The 10-year yield increased 4 basis points to 1.67%, and that's up 13 basis points in just 2 days. So that tells you a lot about the slide in technology. Among single shares, Zoom plunged much as I believe 17% or so today after the company warned of revenue slowdown, which we've already talked about. So we knew that. Also, Best Buy shares, and this was one that caught me off guard, they dropped more than 12% after the company posted slowing sales growth. Now, I've got a deep dive to do on Best Buy in a few minutes. Meanwhile, Facebook and Microsoft were down about 1% each. On the other hand, energy and financial stocks such as Chevron and Goldman Sachs, they booked gains during the session. Still, investors welcomed primarily market PMIs that pointed to a robust U.S. economic recovery. Traders now await more economic releases this week, including the latest FOMC minutes and the PCE, the Fed's preferred measure of inflation. So there's a quick digest of the market today. I see you, Devin, there. I consolidated and I'm keeping my diamond hands strong. Yes, that sounds good to me. Absolutely. So a couple things that were up. Dollar Tree was up 9% today. I'm going to go on a deep dive on Dollar Tree as well. There's something interesting going on there with them. They were down after earnings, but they popped back up once people realized the Dollar Tree may not be a dollar store for much longer. And I'll talk about that in a little bit. Burlington Code Factory, they did pretty well. When I was putting together the Catalyst Watch video, Burlington was, I almost mentioned them. They were on my list, but I crossed it off. And they were up 8.5% today on good earnings report. We've got some blockchain items up. Bitfarms, Riot Blockchain, they were up. Xpeng was up 8.2%. They had earnings today. We did talk about that on the Catalyst Watch video and saying that could electrify the EV sector for them. And talking about EVs, Lucid and Rivian, they were up again today, but Tesla Tesla did fall quite a bit today. I believe it was over 4% that Tesla came down today. So we'll look at Bitcoin right now and then get into a few other things. Remember, if you do have questions, just leave them in the comments. We will go over them. Oh, that's one I want to talk about a little bit later too. We got the Milan Auto Show. Not auto. The Milan Motorcycle Show is happening right now. So Harley-Davidson, that was one of the ones on the Catalyst Watch video, and NIU Technologies were one. We're looking for electric motorcycles. That sounds so funny to say, but yeah. So here's Bitcoin right now. For the day, we have got ourselves a green candle. Bitcoin got as low as 55,128, and it is at 57,700 right this second. So that is good that we've got this green candle here today. It is right there. It was right below that support. I picked the wrong chart, so my lines aren't here. But that support level was somewhere around 55,400, 55,600, somewhere around there. So it got just below that support line. And then that, well, let me just pull those lines up and make sure I get the right chart this time. It came real close to that trend line support. There we go. So it came right down here today, and it landed on that support right there of $55,400. And then, of course, that trend line support, it's getting closer to it, even though price isn't going below this price support here. It's getting closer to that trend line because it's an ascending trend line. So these two lines are going to intersect at some point. And on the chart here, I have them intersecting right around December the 4th. So if Bitcoin continues to move sideways, that will be an interesting date, December the 4th, for Bitcoin, because that's where this support line and the trend line, they actually meet. So again, it's nice to have a green candle on Bitcoin today, bouncing off of that price support there. But it is staying underneath this next rise up for the price resistance support lines, which is right at 57,800. So it's pretty close to it. The candle today did not break above it. So right now we are at the highest we have been for most of the day, coming down just slightly, maybe $120 or so. We've come down in the past 30 minutes. So there, that's Bitcoin. Let's put up Ethereum right quick. ETH, US, I'm just typing the wrong things. ETH, USD, and we'll pull Ethereum up here and look at it. It's been trying to hold on tight to that 50-day moving average, and it did so again today. Nice green candle. Notice, though, at the top of this green candle, it did find resistance at the trend line there. So it is going to take a bit of momentum to break above that trend line. Whenever you have trend line supports, they are usually pretty durable and tough, and it does take quite a bit to break through them, either going up or coming down. So Ethereum is looking nice and strong. It had a low today of 40.62, and it's at 43.46 right now. Okay, the Milan Motorcycle Show has begun, and the leading electronic scooter manufacturer, NIU, they showcased several new models of electric two-wheelers today. And that was a chart I had up here before we went to Bitcoin. The ticker symbol is NIU, and it's NIU Technologies. And you can see their chart here. We talked about them. Yesterday, they had earnings, didn't go so well, and they dropped 16.8%. Today, they come out with a few announcements at the motorcycle show in Milan, and they're up 1.7% and 0.2% in after hours. This is a stock that I did buy on the dip yesterday, and I've just been waiting for some news to see what happens to the stock later on this week. But I'll probably get out of the trade. It'll be either a day or two before I do. Maybe Friday on a short market, but we'll see what happens to it. The other motorcycle is HOG, Harley-Davidson. HOG is their ticker symbol. They're also at the show talking about electric motorcycles. Now, they had a fantastic day yesterday, up nearly 5%. And then today, they were really flat, 0.2%, and that is it. But yesterday was the big day. It came really close. We talked about on the Catalyst Watch video, it had a really interesting setup here, and it didn't have the big boom breakout that you typically see. So I'm almost thinking that maybe a false breakout, or we need to adjust the chart a little bit, or it's just having a delayed effect and just waiting for maybe some other announcements from Harley-Davidson while they're at the Milan Motorcycle Show. But that's it. I don't have a position here in Harley-Davidson, but it's one I'm watching just to see how it reacts to this chart pattern here set up for it. All right, so we had some earnings today. Burlington Coat Factory, they reported, their ticker symbol is BURL. Burlington Stores is the official name there. Now, they had wonderful earnings. They were up 8.5% today. And you can see this company has been very choppy on the stock for months now. And they just got this big move today from earnings. They reported EPS of $1.36, which beat by 9 cents. They also reported revenue of $2.3 billion. That was a 37.7% gain year over year, and that beat estimates by $50 million. All right, another one that I should have talked about on the Catalyst Watch video, but I also crossed off, and that's Dollar Tree. Ticker symbol is DLTR. Let that load so you can see here. Whew, look at that. They had this humongous gap up right here a few days ago on November 12th, and then they ran up nicely today, 9%, and they are flat in after hours. Now, their EPS came in at 96 cents, which beat by a penny, a single penny. But revenue came in at $6.42 billion, which was a 3.9% year-over-year growth, which was in line with expectations. Now, Dollar Tree is growing branches today, a welcome change after having been chopped down in recent quarters. The stock sold off on the previous 2 earnings reports due to the company's sharply reduced guidance. The dollar store retailer is being significantly impacted by supply chain issues. As a result, I was holding my breath in anticipation this quarter, and that's why I didn't put it in the Catalyst Watch video, because they have not been performing too well. However, this time the company guided in line, which we will take as a win, right? But the Dollar Tree also fleshed out its plans for price increases. That's right, the Dollar Tree may no longer be a dollar store, which is likely adding to today's pretty big move of 9%. Besides earnings, the other big news was Dollar Tree's further color on the announcement it made in September regarding its intention to expand its pricing assortment above the $1 hard price point. For one thing, Dollar Tree says that the decision is permanent and is not a reaction to short-term market conditions. The $1.25 price point will apply to a majority of its merchandise. It will allow Dollar Tree to expand its offerings and introduce new products and new sizes. The higher price point also enables the company to reintroduce many customer favorites, I should say, and key traffic driving products that were previously discontinued due to the constraints of the $1 price point. Earlier customer feedback has been very positive, the company says, and the rollout to all stores should be done by the end of Q1, and that's about April timeframe. Bottom line, the quarter had some cross currents in our view. The upside was more minimal than usual, and comparable sales, well, the performance registered as only decent. However, after the weaker guidance in recent quarters, the company's inline guidance for Q4 likely comes as a relief to investors. The higher price point discussion was also welcome. Dollar Tree made it clear that those changes will be, rather than an inflation counting adjustment, a lasting part of its model. The higher price points could be a watershed moment for Dollar Tree. They have had been getting pounded by higher costs, and raising prices even from $1 to $1.25 is really a sustainable increase, and on a percentage basis, it's not really that much. I also do not think consumers will be too upset at all by this change. In fact, I think it could consumers, that is, could welcome it as a result in new products in bigger sizes. Because when you go shopping at a dollar store, it's usually those tiny little suitcase types of bottles that you can get of different shampoos and other things at the dollar store. And a lot of times the products are not that quality focused and can break quite easily. But it is a cool place to go to get party supplies where you just want to get the cheapest thing that you can find. And that's usually when you go to a dollar store. So this price change will allow them to increase the quality by a little bit. Not much, not comparing to a Walmart or a Target or anything of that nature, but it will be beneficial for investors in the long run. All right, we did touch on electric vehicles there for a little bit. Let me just pull up their charts. LCID, Lucid, I will start with. They were green today. They were up 2.5% there. You can see it. Now, this price is starting to tighten. And if I go to a 4-hour chart instead of a daily chart, we could almost see maybe another formation like we had back here, and then we had a second one. It is possible that we are looking at a third formation starting to appear on the chart for Lucid. And if that's the case, which way is it going to go this time? We've got 3 points to connect to on the top resistance line, but on the bottom line, we don't have a third one yet. We only have 2, which puts it looking like that. So, are we reaching the nexus point on the chart for Lucid? And is this time going to be different? Since it's already run up so much, could we be seeing the beginning stages of a reversal and fall instead of another blast off shooting out of this thing? That's what I'm questioning for Lucid. I'm just not sure if there's enough action happening at Lucid. I mean, they are back at the beginning of the year. They were talking about 1,000 deliveries. Now they're at 520 deliveries of the Lucid Air. I don't really think they're going to have a blowout and go above estimates of that 520 deliveries. So what other catalyst could there be to really send this thing up besides just momentum traders piling into it and trying to make a quick buck? Fundamentally and technically, I just don't see a catalyst right now to send Lucid up much higher. The company obviously had been acting irrational for I guess about a week ago or so, when it was making these big moves, 21% up, 5% down. That's not too bad. But then a 14.8% down. And then we get a 10% move up and another 7% move up. So I think these big irrational moves have got to be coming to an end. And maybe it'll just be a small tip to the downside, and this thing will start consolidating or slowly bleeding out. But fundamentally and technically, I cannot see a reason for it to continue moving higher at this point in time. Now, of course, if they do have some news about they did produce more than 520 vehicles, that may be a reason, but I don't think we're going to know anything about that until January. So we're still just over a month away from January. So I'm just not seeing what could cause Lucid to continue going higher at this point. Okay, Rivian, they did have a neat bounce around today. RIVN for Rivian. Here's the 4-hour chart. And let me open this up. Actually, I'm going to go to a 1-hour chart so we can see this a little more detailed. Let me pull it in here. So remember these two blue lines running across your screen, horizontal. They were at $120 and $125. Now, it got down as low as $106.95 yesterday. And today, it rallied. It was up 1.4% to close out the day. But it got to this $120 mark, and that acted as resistance. Its 21-day moving average coming down also acted as resistance on the wicks of the candle. So we may be seeing a ceiling here for Lucid, and maybe this stock is going to settle down between 100 and 120 and maybe find a support resistance area within there. It's still a little too early to say where support may come in at. But I do find it interesting that it did kind of hang around this $120 mark there for today. All right, Tesla, TSLA, they were down today over 4%. Yeah, 4.1% today. We're on the 1-hour chart here, so you can see that drop. But there was a bounce when it got to 1063 on the chart. It bounced there at that low, and it closed out the day at 1109, and it's just a few pennies down in after hours to 1108.09. So yeah, that's Tesla today. Once they broke out of this symmetrical triangle, they ran up. They've just been slowly bleeding out ever since until that bounce today. So I'm curious to see if this is going to start to wind up being some type of a support area. If we go back and look inside the symmetrical triangle here, before it broke out for about a week here or so, less than a week, there was this support right here around the $1,078 mark. And if we go over to today's action, we can see there was resistance at that price point for a moment before it did bounce and move higher. So yeah, there you have it. Lucid up, Rivian up, Tesla down. Okay, another company that I want to dig into and understand a little bit is Best Buy. Ticker symbol is BBY. I'll go back to the daily chart here. Yeah, that's a big gap down there. 1-day chart. And I mentioned on the Catalyst Watch video that this could be a sell the news type of earnings, because they had run up so fast in such a short period of time. And this last run right here, it went up and touched the top of the chart, this trading channel, the resistance line, and then fell back down from that. So today they are not anywhere near this this channel. Let me redo the chart there. All right. So up here is the top of that channel, but the stock price, well, it's down here right now. So when it dropped today, let me draw this right here. The price right now is right here. This is where the price is right now, where that purple squiggly line is. That's the price right now. Just a hair bit higher than that. But when it fell from all the way up here, sky high, right up here, the nosebleed seats. It fell all the way down to its 200-day moving average, and it bounced off of that, and there was a ton of support when it got that low. And that 200-day moving average is at $115. And there was a lot of support that came in and bought Best Buy when it dropped. And I think that has to do with the holiday shopping season coming up and a lot of sales for Best Buy in the fourth quarter. But I'm not sure if Best Buy is expecting such a rosy outlook. So Best Buy, I think the best way to describe what happened to them with this quarter is they became a victim of their own success. As their shares, as we just looked at, they took a nosedive following another beat and raise quarterly report from the consumer electronics retailer. It was fueled by the remote working trend that ignited sales of PCs, laptops, printers, and mobile devices. The company has routinely blown out EPS and revenue estimates over the past 2 years. That's some pretty good track record, and that's one of the reasons why I mentioned it in the Catalyst Watch video, because they had such a good track record. With shares having soared by about 33% since early October, hitting record highs just yesterday, I believe. In the process, investors set their sights on another blockbuster earnings report against the backdrop of the ramp up in the holiday shopping season. Those highlighted expectations were further bolstered by strong quarterly results from other major retailers like Home Depot, Walmart, and Macy's, to name just a few. We could say Target too. Although Best Buy delivered another solid performance overall, it wasn't strong enough to avoid a sell the news reaction. Exactly what I said in the Sunday's Catalyst Watch video, the most important video I do all week. One item that immediately stands out is that the 12-cent EPS beat for Q3 falls well short of Best Buy's recent EPS upside, which averaged 68 cents over the preceding 5 quarters. An average. Wow. The more modest outperformance may partly be attributed to a 60 basis point decline in domestic gross margin by 23.4%. Best Buy has grappled with rising costs and a slightly more promotional environment this year compared to last year. The impact of less favorable year-over-year comparisons is also evident throughout the report. After total revenue and enterprise comparable sales both increased by 20% last quarter, aided by maybe say a pedestrian top line growth of 3.9% in the year prior, in the quarter year prior. Growth significantly tapered off in Q3. This time around, Best Buy lapped total revenue and enterprise comparable sales growth of 21% and 23%, resulting in a nearly flat top line result and enterprise comparable sales growth of just 1.6% for the quarter. Adding to the angst is that the company's Q4 revenue guidance of $16.4 billion to $16.9 billion is merely in line with the $16.7 billion estimate. While Best Buy didn't significantly cite supply chain disruptions or product shortages in its earnings press release, I have to wonder whether those issues are playing a role in its conservative guidance. With Target, Ross stores, and others feeling the effects of supply chain problems, Best Buy wouldn't be the first retailer this earnings season to get hit by those persistent headwinds. The main takeaway is that Best Buy was facing sky high expectations, and that wouldn't have taken a spectacular report to keep its upward momentum going. Its results were solid, straight up solid, demonstrating that key secular trends remain largely in place. But its narrow EPS beat and its tepid outlook are promoting investors or prompting investors to take some gains today after a staggering and beautiful run up over the past month. So that's it for Best Buy. They were the master of their own musical. They were the last one standing in the musical chairs that they were playing, and it was just over expectations. Expectations were just too high for investors, and that's why Best Buy fell. It was definitely a sell the news atmosphere for Best Buy. All right. Remember, if you do have questions, leave them in the comments and we will go over them. Another company I want to go in a little deeper on is Dick's Sporting Goods. Ticker symbol is DKS. This one surprised me a little bit with the reaction here on the stock chart. It was moving nicely up in this trading channel. It got to the top of it yesterday, but today for earnings, it was down 4% during regular session. It's up just about 1% in after hours. I do find it interesting. The place where it came down to, it got to a low right here. Let me mark that. Let me put a little mark so it's hard to see the candle wick. But it got right here. This is how low it got. Wrong button there. It's like a laser pointer going around. Anyways, this is where the price is right here. Now that actually works out. I'll draw a circle around that line. That's where the price fell. So it still stayed within its trading channel, just although here on the lower end of it. Now, when it came back up, because it did drop and there was a buy the dip, you can see the green candle here. There was a lot of buying pressure on the dip here. It got back up to the top side of the trading channel and not the lower side of the trading channel. So that was a promising note. And it ended up closing well above its 50-day moving average and well above its 21-day moving average. Those are positive, technically speaking, on the chart. But what really happened? What was going on? Why did the stock even drop in the first place? So I would say that DKS knocked it out of the park in its Q3 earnings. The stock, well, it took a dive anyways. Maybe with a sports reference, we're doing a diving competition right now. I don't know. Sometimes you just got to laugh when things don't work out the way you thought they should. But anyways, key highlights from their Q3 include crushing it on same store sales estimates, posting another massive earnings beat, and guiding to further upside to cap off the year. It's just incredible how good these earnings were. It's just like the Target effect, right, guys? Target had excellent earnings, but the stock still went down. So why did the stock sell off? Well, one factor that I could find is it could be raised expectations after a blowout Q2. The same thing we saw with Best Buy. Expectations were just too high. especially given that multiple retailers saw a robust back-to-school season throughout Q3, which featured the full return to team sports, and that's where DKS could really shine. For example, in early November, Under Armour, ticker symbol UAA, commented that it saw a solid back-to-school season this year, highlighted by strong demand for sports teams and apparel and footwear. Also, Target, which we talk about a lot, recently posted comps of over 20% in its sporting goods category during its last quarter, or this recent quarter. It reported last week. Anyway, so the bar was set really high, fairly high for DKS, and that really could be why it fell. Expectations were just too high. Therefore, investors may be rather unimpressed with such a spectacular earnings. Their EPS was $3.19. Since the upside was significantly lower than Q2 and Q1, the stock has also continued to reach all-time highs this year, running about 8% since DKS's Q2 earnings report in late August. And that doesn't seem like a big run, does it? Compared to others like Home Depot's run or even Best Buy's run. Although shares still traded at a reasonable valuation of 9.6 times the company's fiscal 22 EPS forecast, investors may be taking some profits off the table since DKS will continue to lap difficult comparisons, which may only grow more complicated in the face of inflationary and supply chain headwinds. It is worth noting, though, that DKS increased inventories by over 7% year over year in Q3, something we saw with Urban Outfitters. Its second straight quarter of improving inventories. So that's a good sign that good management took place. Although shares are dipping today, or they had dipped today, there was still a notable standout in the quarter. Same store sales grew 12.2% in Q3, despite going against unfavorable comps of 23.2% from the year ago period. Investors may have wanted to see stronger growth comps given the 19.2% growth posted in the previous quarter, which was lapping similar challenging comps in the year ago period. However, DKS's Q3 comp growth is still tremendous compared to before the pandemic, when comps tended to be around the low single digits. Before, in 2019, they would get excellent rebound or excellent growth in the stock on single digit numbers for growth for same store sales. Now they're killing it by double digit growth, and the stock is going down. Fiscal year 2022 is shaping up to be an unprecedented year of growth, as evidenced by DKS delivering another excellent earnings report in this Q3. However, as multiple metrics came in lower than what the company had reported over the past couple of quarters, investors are taking profits. And you can't blame them. Shares not getting the same round of applause they saw in Q2 could also be partly due to DKS not declaring that special quarterly dividend that we talked about from Q2. And earlier this week, I think yesterday we mentioned it, and in the Catalyst Watch video we mentioned it. Last quarter, they gave a special dividend of $5.50 to investors. That is pretty big. So they decided not to do that this time. Furthermore, there are potential headwinds going forward, such as inflationary and inventory pressures like we've talked about for other retailers. However, DKS has thus far done a decent job managing those pressures, as illustrated by the sizable earnings upside and improving inventories. Bottom line, I remain bullish. Yeah, the stock fell today on good earnings, but I still remain bullish on the sporting goods retailer, especially as the getting my words mixed up here, especially as the pandemic fueled a shift in consumer taste towards more outdoor activities, fitness, and athletic apparel. That's exactly what DKS sells. It's their specialty. On a final note, DKS's Q3 results could indicate that we may be seeing in upcoming earnings for Habit, HIBB, and Academy Sports and Outdoors, ticker symbol ASO, when each reports earnings December 3rd and then December 10th. Both companies have also seen their stock prices climb pretty much the same as DKS this year. So when they report, if they're just as good, are their stocks going to fall or continue up? Let me know what you think about Dick's Sporting Goods and what happened on their earnings in the comments below. It was one that I did not expect to fall, just like Target of last week. But I guess when things are just going so well, there's got to be a wrench thrown in it somewhere. But I see it as another buy the dip opportunity for another quarter long hold until next quarter. That's what I see it as. I think the stock will continue to move up in its trading channel. Today, toss it up to profit taking. Toss it up to over expectations. There's a few things that we could say for DKS here. All right, that's what I wanted to get into with those companies: Dollar Tree, Best Buy, and Dick's Sporting Goods. After reading through those earnings reports. Okay, a couple other things here to note. Dell, they did beat their earnings today by by 20 cents, not 2 cents. By 20 cents, they beat on revenue. That was good. They posted a $2.37 per share. Let's see, 20 cents better than estimates. And revenue, it rose 20.8% year over year to $28.41 billion, and that beat guidance as well. Let's see here. What else do we have? Gap, they missed earnings by 24 cents. They also missed on revenue. Comps were only up by 5%. They guide their fiscal 2022 EPS below estimates. That's not a good look, and that's for Gap, and that's an apparel store. They have revenue below consensus also for the full year, so that's not looking good for them. And they say that they are struggling with supply chain constraints, and those also impacted their comps and sales. So not too good for Gap there going forward. When we look at comps for Gap of only 5%, Old Navy they were down 9% on their comps. Banana Republic actually increased 28% on their comps, and Athletica or Athleia, I think it is, they were up by 2%. So that kind of puts it in perspective there. Gap having comps of only 5%. When you look at the other ones, down 9%, up 7%, up 28%, that's an outlier, Banana Republic, and up 2%, they actually did pretty good. They were right in the middle with everyone else. Let's see here. Anything else? Oh, here's one from Procter Gamble. This might hurt their stock a little bit. They have to recall certain Old Spice and Secret Spray antiperspirant products after detection of benzene. So I guess we'll see there. Guess the company, the apparel, they beat by 17 cents and they beat on revenue, and they announced a dividend increase, and that stock is down 1%. So you just can't win at all of them these days. For tomorrow, we do have John Deere reporting, ticker symbol DE. I believe they were actually green today. Let's pull them up on the screen here and look. Deere Company. Yeah, they were flat, but still green. And they've got this nice setup right here. And their 200-day moving average, as it continues to curve, it is like going to come and meet right at this nexus point too. So it's going to be a battle there of the 200-day moving average as it continues to move forward to a nexus point. And it's above its 50-day moving average. It's below its 21-day moving average. So earnings tomorrow, it's going to either send the stock down from this or it's going to send it up. I don't know which way. I think their earnings are going to be weaker than anticipated, mainly due to the strike that they had. And even though the strike was on the latter half of their earnings, it's still going to be it's still going to affect them in what they were able to produce, and it's going to lower their revenue. We also have Nano Dimensions reporting tomorrow too on their earnings, ticker symbol NNDM. I get a bunch of requests for Nano Dimensions to talk about them. So let's see. They were flat today. That's interesting. You hardly ever see that. But they have fallen out of this pattern that they were in. They had a nice channel of support and resistance, but they have fallen recently. And it's a small 3D company. I don't believe they have any debt. If we let's see if they have any financials here on them. Balance sheet right here. Let's look at it quarterly. Yeah, they're wow. Their debt to assets in Q2 21, 2%. So they do not have that much when it comes to liabilities. That is a very low number. 2% debt to asset. That's crazy. Of course, they've got no cash flow here to speak of. Yeah. Last quarter, they had, what is this, $813,000, but they were burning some cash. They had a net income of a loss of 13.6 million. So they're burning cash. They're burning a little bit less than they were a year ago, but they're still burning cash and not making money. So we'll see what happens when their earnings come out tomorrow. I don't follow the company too deeply, but I do get questions on it. When you look at the chart, you see back here in January all this scribbling on here. I was trading it back then because it had some crazy run-ups back then, some really crazy run-ups. But it's not going to see anything like that anytime soon. All right. Well, that's the companies that I wanted to talk about today. It's going to be a rather short live stream, probably because a bunch of you have already taken off to enjoy your holiday week. And that just does bring up a quick reminder The market is open tomorrow, Wednesday. Then it is closed on Thursday. And then on Friday, it's a short day. The market closes at 1 p.m. Eastern. And then, of course, it's closed over the weekend and then back in full swing on Monday. So, yeah, everybody gets a little extra break this week with the holidays and Thanksgiving and so forth. So, yeah, just have that on your calendar. So yeah, I don't have any other companies that I wanted to talk about today. That covers everything that I wanted to talk about, that I had planned to talk about. Best Buy CEO says organized crime is horrible change in this is interesting. Let me pull this up. I didn't catch that. I guess the CEO has been talking to the media since their earnings. It's loading. So Best Buy CEO, organized crime rise is horrible change in retail business. Best Buy CEO Corey Bear said Tuesday that the electronic retailer is working hard to try to stem a rise in loosely organized bands of thieves who have targeted the firm's retail locations. Quote, it's just really been a horrible change in the trajectory of the business, the head of Best Buy told CNBC. Yeah, that's on the West Coast. Even companies are closing their stores down. They're closing early. They're not open at dark. It's a mess. And of course, having the closed stores and having to write off goods from theft, that's just going to hurt earnings and hurt investors too. Yeah, I don't want to get into it politically about it, so I'm just going to leave it at that. Okay, that's interesting. All right, anything else here? HP says commercial PC sales was an easy revenue beat because of that. Let's see. Clover Health announces completion of $300 million public offering of common stock. Western Digital shares score 6% gain after they get a buy rating. Okay. Let's see what else. I don't see anything else. Yeah, gas is up 3.9% in after hours. Dell's is up 1.3. Let's see here. Gap is on the losing end in after hours, down 17%. Autodesk is down 13% in after hours. VMware is down 0.5% in after hours. They're all trading lower based on their earnings and guidance. Oh wow, Oatly, the company I said stay away from, right? It is down 16.7% in after hours. It announces bought deal offering of 8 million shares, priced at $1.25 a share. Okay. Eli Lilly is down in after hours. It was awarded a $530 million Army contract. Procter Gamble is down in after hours, and we already talked about that. They have a recall. IBM is down in after hours. It's going to compete for a $1.6 billion U.S. Army contract. So HP, Dell, and IBM are among others to compete for the U.S. Army contract worth $1.6 billion. It's for commercial hardware, software, and related incidental services at the enterprise level for the Army, Department of Defense, and all other federal clients. Okay. All right. Well, I didn't have much to talk about today. If you guys have anything you want to talk about, now would be a good time to bring it up. I'm still doing the live show tomorrow at 5 o'clock, even though I'm sure there probably won't be very many watching because you'll maybe be traveling. I don't know. Are you guys traveling for Thanksgiving or staying home? Or what are you doing? Let's see here. Let's look at I wonder if we can right now in after hours. Round Hill Sports Betting and iGaming ETF, ticker symbol BETZ bets. It's up 7.5% in after hours. Aurora Innovation is getting a bounce. They're up 2.4% in after hours. BJ Wholesale Club, they're up 1.8 after hours. Sprout Social, that company just is constantly up and down and up and down. They're up 1.8 in after hours. Just some of the after hour movers here. Let's see here. Redfin, they were down again today, but they're up 1.4% in after hours. GameStop's up 1.3% in after hours. All right. Now we're down to the smaller movers. Okay. Oh, let me just look at who were the biggest losers. Aurora Innovation, yeah, they were a lot of profit taking today. They were down 18% today. GameStop was down 13%. Best Buy we talked about. Sweet Green, they were down 11%. Zoom was down 14%. Open Door down 8.9%. Yeah, a lot of these growth companies just got hit today. Astra Space, after doing a great day yesterday, they were down 8.7 today. Let's see, got some restaurants there, and DoorDash was down 8.5% today, so quite a bit of red. All right, well, unless there's anything you guys want to say, I'll go ahead and wrap it up right here then. I will be here tomorrow at 5 to talk about whatever you guys want to talk about, whatever's on your mind. If you did find this information, this video to be helpful, informative, actionable, then click the like button, share this video, and then click the first link in the description to help support my research, analysis, and technical breakdowns by becoming a Patreon member. I would greatly appreciate your support, and we've got a lot of goodies coming for Patreon members this quarter by the end of the year. We just sent out our very first trade setup today. It was, I think, a pretty good one. It's a safe one. In a sea of red today, that company was actually green today, so that was good. All right, ladies and gentlemen, thank you for being here with me. I'll go ahead and wrap it up now. If you are watching the replay of this live stream, feel free to leave your question with your ticker symbol in the comments, and we'll go over it during tomorrow's show. So thank you all for joining me, and I will see you in the next video.